Bull Bear Buzz Podcast for decoding markets, fueling minds.
It's always interesting watching where the money flows, and right now, SIP's systematic investment plans seem to be really picking up steam.
Definitely.
There's even this prediction, I saw the CEO of Union AMC mention it, that monthly inflows could hit like 40,000 crore in the next 18-24 months. That sounds massive.
It is a bold call, yeah. And, for anyone listening who's thinking about building wealth without, say, the stress of timing the market or needing a huge amount up front, well, SIPs are really relevant.
Right.
It's just investing a set amount regularly. Simple concept, really. Makes investing feel more approachable, maybe.
Totally agree. And just to put that 40,000 crore number in context, this past March, inflows were already over 25,925 crore. And the average for the whole 2024-25 financial year, about 24,113 crore a month.
Which is a huge jump from the year before it. Wasn't it around 16,600 crore then?
Exactly. So yeah, there was a tiny dip recently, but the overall trend seems strongly upwards.
And it's not just the monthly flow, it's the total pile growing too. The assets under management, the AUM through SEPs.
Right, the AUM.
That hit 13.31 lakh crore in March 2025, up from, 10.71 lakh crore the year before? That's a lot of disciplined money piling up.
Okay, so hitting 40,000 crore. What's fueling that optimism? The Union AMC CEO mentioned two main things, didn't he?
Yeah, basically two big drivers. First, a more, let's say, investor-friendly tax system. And second, the market itself looking better valued.
Interesting. We should definitely unpack those.
And then there's this other angle, too. India possibly opening up its markets, mutual funds initially, to foreign individuals. Non-resident foreign citizens, NRFCs.
Yes. I saw that with an initial limit, was it?
Proposed at USD 250,000 a year, which interestingly is the same limit as the LRS, the liberalized remittance scheme for Indians investing abroad.
So kind of a mirror image there. What's the thinking? Global integration.
Pretty much.
Wow.
Aligning with global practices, potentially bringing in more capital flows. It's a big step, potentially.
And starting with mutual funds feels cautious, controlled.
Seems that way. Through specific RBI-authorized banks, careful checks, a structured approach.
Okay, so our mission for this deep dive then. Let's figure out why SIPs are booming, what this foreign investment angle might mean, and, what it all means for you, the listener, trying to manage your own money.
Sounds good. Let's start with the basics, maybe. Why are SIPs so popular in the first place?
Good point. I think it's the simplicity, right? Investing small amounts regularly, maybe just a few hundred rupees even.
Exactly. Takes away the need for perfect market timing or having a big lump sum ready. Makes it accessible.
And the growth shows that accessibility works. Remember back in April 2016, monthly SIPs were just over 3,000 crore.
Wow, yeah. Compared to around 26,000 crore now, that's quite a climb.
It really shows how investing has become more democratized, doesn't it? It's not just for the super wealthy anymore.
Absolutely. It reflects a wider understanding of, long-term discipline in investing.
And the power of that discipline, think about it. If you put 10,000 money a month into an SIP and maybe it returned, say, 20% again.
Which is a strong return, mind you.
Sure, it's an example, but over 10 years, that could grow to around 44 lakh. It just shows how compounding works its magic with regular contributions.
That example really hits it home. And it ties into that idea of rupee cost averaging, too. Buying more when prices are low, less when they're high.
Right. Takes the emotion out of it a bit.
Over the long run, yeah.
Yeah.
Lowers your average cost.
Okay, so let's dig into those growth drivers you mentioned. First, the new tax regime, effective April 1st, 2025. The big news is no income tax for earnings up to 12 lakh annually.
That's right. And that's potentially huge. Think about it. A big slice of the population suddenly has more money left over after tax.
More disposable income.
Exactly. And where does that extra money go? Some will be spent, sure, but a good chunk find its way into savings and investments.
And given how popular SIPs are,
you'd expect SIPs to capture a decent share of that. People who maybe focused only on tax-saving investments before might now look more towards wealth creation, like through SIPs. We could see a shift.
Makes sense. More money in pockets, potentially more flowing into SIPs. Okay, driver number 2. Improved market valuations. Union Mutual Fund upgraded Indian equities to the attractive zone. What does that mean, practically?
Well, it's a signal from a major institutional player. They use these indicators, like their fair value spectrum, to judge if the market is cheap, fair, or expensive.
Right.
Moving to attractive from fair or moderately expensive suggests they see better value now. They think stock prices are more reasonable given the strong domestic economy and how well companies are actually doing their earnings.
So the market doesn't look overpriced to them right now.
Basically, yeah.
Yeah.
They see potential for growth without prices being, sky high.
And that feeling that the market's attractive probably encourages more investment, makes people more comfortable putting money in, maybe via SIPs.
Absolutely. It definitely boosts sentiment. And we saw proof of that, didn't we? Equity mutual fund inflows in FY25 were massive.
Yeah, you mentioned that earlier. What was the number?
4.17 lakh crore, more than double the 1.84 lakh crore from FY24. That clearly shows investors felt better about the market thanks to those good corporate earnings and the overall economic picture.
Okay, but markets aren't always smooth sailing, right? We know that. There's volatility. The report even said many equity funds had pretty weak returns or losses last year, except maybe some sector-specific ones.
True, volatility is part of the game.
So how do SIPs help investors, ride out those bumps?
This is where that rupee cost averaging really shines, because you invest the same fixed amount each time. When the market dips and fund unit prices fall, your fixed amount buys more units.
Okay.
And when prices are high, you buy fewer units. Over time, this averages out your purchase cost, potentially lowering it compared to dumping all your money in at one potentially bad time.
So sticking with the SIP, even when things look shaky, can actually work to your advantage long-term by buying more when it's cheaper.
Precisely. It rewards discipline and a long-term view. You have to resist the urge to panic sell during downturns.
Got it. That's a key takeaway for sure. Now, let's switch gears slightly. What are the big mutual funds actually doing? Any insights from their recent buying and selling? March data, for instance.
Yeah, looking at institutional activity is always interesting. Gives you a sense of where the big money is seeing value or maybe taking profits. In March, funds were actually net buyers of shares, quite significantly about 11,400 crore.
Okay, so buying more than selling overall. Any specific stocks they were snapping up?
Some big names, yeah. HDFC Bank, Reliance Industries were among the top buys. Also, Zomato saw quite a bit of buying interest from funds.
Interesting mix. And on the flip side, what were they selling?
Kotak Mahindra Bank saw some selling. Bharti Airtel, too. Again, fund managers have different reasons, rebalancing, strategy shifts. It's not a direct sell signal for individuals.
Right. It's just a peek behind the curtain, as you say, provides context.
Exactly.
Now, Union AMC, the ones predicting that big SIP growth, they have their own plans too, right? Expanding into SIFs and AIFs. And something about Gift City.
Yeah, that's right. SIFs are specialized investment funds. AIFs are alternative investment funds, basically moving into more niche or sophisticated investment areas beyond standard mutual funds.
Okay. And Gift City, why set up there?
Gift City is that special economic zone in Gujarat, designed to be a global financial hub. Setting up there suggests they might be targeting international investors or different types of financial activities, possibly taking advantage of the specific regulations and tax benefits there.
So it signals broader ambitions, diversification.
Definitely. It shows the industry isn't just relying on traditional growth, but exploring new avenues, catering to different investor needs, maybe higher net worth individuals or institutions looking for alternatives. It reflects optimism about the whole Indian financial market.
And it all ties back to that long-term view, that Union AMC campaign slogan, Badna Haito Lagi Raho Sap Chikaro.
If you want to grow, keep going, keep doing SIPs.
Yeah.
It perfectly captures that need for persistence, sticking with it, goal-focused.
It does. Okay, let's really unpack this news about opening up to foreign individuals, the NRFCs. This feels like a pretty big policy shift. What are the nuts and bolts of Phase 1?
It is significant. So, Phase 1 allows non-resident foreign citizens, people without Indian origin, to invest. The limit is set at USD 250,000 per year.
The same as the LRS limit for residents going out.
Exactly, a kind of symmetry. And initially, it's restricted to investments in debt and equity mutual funds, not direct stocks yet.
Okay, mutual funds only. And how does the money actually flow in? What are the checks?
It has to come through RBI-authorized banks here in India, acting as authorized dealers or ADs. They'll be responsible for the heavy lifting on compliance, meaning stringent KYC, know your customer checks, AML, anti-money laundering procedures, making sure everything aligns with global standards like the Financial Action Task Force, the FATF, guidelines.
So proper checks and balances.
Absolutely. And each foreign investor gets a digital PAN card, too, for tax tracking and oversight.
It sounds very structured. And limiting it to mutual funds initially. Why that specifically?
Well, it likely mitigates concerns about foreign control over Indian companies. Mutual fund investors don't get voting rights or direct management influence in the companies the fund holds. It's a way to allow capital inflow without impacting corporate governments directly, at least initially.
I see. Control risk management. And where might this new foreign money have the biggest impact? Equities.
Yeah.
Or somewhere else?
Well, equities always get headlines. A lot of analysts think the debt market could be the primary beneficiary.
Really? Why is that?
Because India needs huge amounts of long-term capital for infrastructure, housing, big development projects.
Right.
Foreign inflows channeled through debt mutual funds, which buy government bonds, corporate bonds, could provide a really significant pool of stable long-term funding for those areas.
That makes a lot of sense. Tapping global savings for national development needs via the debt route. And you mentioned a potential second phase, direct market access.
Yeah, the reports suggest that if Phase 1 goes smoothly, they might consider Phase 2. That could involve allowing NRFCs to buy and sell shares directly on the stock exchanges through SEBI-registered brokers.
But that would need even tighter controls, presumably.
You'd expect so. Probably even more detailed KYC, tax compliance, maybe joint oversight by brokers and the banks. It would be another level up in complexity and access.
So it's definitely a step-by-step process. Calibrated liberalization, sounds like.
That's the term being used, yeah. Balancing the benefits of foreign capital with the need for market stability and security. Carefully opening the taps, not throwing the doors wide open all at once.
Makes sense. Okay, now for something many listeners might be curious about, actual performance. We know past performance isn't a crystal ball.
Crucial disclaimer, yes.
But looking back can give some perspective. The report listed the top 10 funds based on 10-year SIP returns. Let's highlight a few. Who is at the top?
Okay, yeah, looking at the historical data is interesting. Number 1 was the Quant Small Cap Fund. Over 10 years, its SIP return was reported as 24.56% CAGR.
Wow, that's very high.
It is. So that hypothetical Euro 10,000 monthly SIP we talked about, in this fund, over the last decade, it would have grown to roughly 43.54 lakh.
Incredible. Just for comparison, what about a lump sum, like 1 lakh invested 10 years ago?
In that same fund, a 1 lakh lump sum would be worth about 5.78 lakh now, based on those figures. Shows the difference between SIP and lump sum approaches, too.
Definitely. Okay, who is number 2?
That was the Nippon India Small Cap Fund. Still very strong, a 10-year SIP return of 22.93%. The 10K monthly SIP there would be around 39.90 lakh.
Still impressive. And the lump sum?
About 6.42 lakh from an initial 1 lakh.
Okay, and maybe one more. Number 3?
Number 3 was the Quant ELSS Tax Saver Fund. That's an equity-linked savings scheme, remember, so it has tax benefits too. Its 10-year SIP return was 21.74%.
Turning that 10K monthly SIP into
around 37.43 lakh, and the year lakh lump sum into roughly Euro 6 lakh.
Interesting that the top few are small cap or ELSS funds. What about the rest of the top 10? Any patterns?
Yeah, the report noted quite a few mid-cap funds in there too, and some sectoral funds like infrastructure. So higher growth segments, small and mid-caps especially, have clearly dominated the long-term charts over the last decade.
But again, and we have to stress this.
Absolutely. Past performance is not indicative of future results. This is just historical data for informational purposes.
Always consult a financial advisor before making any decisions. Don't just chase past winners.
Couldn't agree more. Your goals, your risk tolerance, understanding the fund, that's what matters.
Okay, so let's try and wrap this up. Key takeaways from our deep dive. SIPs are clearly on a strong growth path.
Driven by things like more disposable income thanks to the tax changes and a more positive market outlook.
Plus, this potential boost from opening up to foreign investors, even if it's gradual.
Right. And the historical numbers, while not predictive, do illustrate the potential power of just sticking with it. Long-term discipline.
Those two drivers, the tax regime and market valuations, really seem key for future growth forecasts, like that 40K crore number.
They seem to be the main catalysts experts are pointing to, yes, creating a favorable backdrop.
So for you listening in, the message seems to be that SIPs offer a pretty straightforward, accessible route to potentially build wealth over time by participating in India's growth, even starting small.
It democratizes investing, as we said.
Yeah.
Which leads maybe to a final thought to leave with everyone.
Go for it.
Considering the kind of long-term returns we've seen historically and the projected economic growth ahead for India,
Wow.
what financial goals that maybe felt distant before could perhaps become achievable for you through the simple discipline power of regular SIP investing?
Something to definitely mull over. How could this fit into your own financial journey?
Exactly. Worth exploring further.